Hi guys, this is Zahir Anwari, co-founder of Sublime Trading, here with your daily update on the UK and US indices for Wednesday, the 8th of April. Okay guys, hope you're well. If you're new to these daily recordings, then I recommend starting with the recording that's pinned to the top of our Facebook group so you get a real good understanding of what I go through in these daily updates. Okay, so let's start with the FTSE 100. As always, this is our three-screen setup, monthly in the top left, weekly in the top right, and our daily chart here at the bottom. Starting with the monthly time frame, we can see that price is still finding support around the low of February 2016. So we really need to see whether price is going to move through this level or whether price is going to bounce back up to the low of 2019, which is this red line. On the weekly time frame, price is below the 200 moving average and the 50 simple moving average. Currently, price is bearish and going through a bit of a pullback. So is this just a pullback before a move back to the downside, or whether it's an early sign of strength back to the 200 moving average? And if we come down to the daily time frame, if I just open that up, and we can see yesterday we had a move of around just under 4%, and then closed with a move of around 2.5%, and we can see that so far today that move has been undone and we've had bearishness to the downside. But if we look at the bigger picture, the market's just really stuck in this mini area of consolidation. So again, are we seeing some kind of resistance before a move back to the downside? Ultimately, it's the low of March that we want to see cleared, or are we going to start seeing strength back to the 200 simple moving average? Okay, so that's the FTSE. Let's move to the Dow Jones, starting with the monthly. We can see that so far April is looking bullish. It's attempting to break through the low of last year, which is currently acting as resistance. So again, we need to see whether price will start moving back towards that all-time high, or whether we'll start seeing weakness back to the downside. The weekly time frame paints an interesting picture. We can see that we've had weakness and now a pullback back to the 200 moving average, which is a proven area of resistance. We can see the bears are coming in and pushing price back down. So again, we really need to let price dictate whether we see strength to the upside, or whether we're going to see weakness back to the downside and then a break and close below the low of March. If I open up the daily time frame, what we can see is, if I get the measurement tool, we had a gap up of around 4%, just over 4%, and the bears came in and filled the gap. So a really good example of why you don't want to be getting caught up in intraday movement. You really want to let price dictate a clear direction, and for now there isn't a clear direction. That will be once price either clears the all-time high for bullishness, or at least the 200 moving average at the earliest, or the low of March to suggest further weakness. For now, we need to stand aside and let the market dictate. We'll see similar movements on the SP 500. We can see price in April's finding support at the low of last year on the monthly time frame. On the weekly time frame, again, price is interacting with the 200 moving average. It was looking far more bullish, but the bears are starting to come in. So again, is this going to be resistance and a move back to the downside, or is price going to break through? And on the daily time frame, we can see a similar movement to the Dow Jones. We had a gap up at the start of the day, price came in and filled the gap. On the Nasdaq, starting with the monthly, again, price is looking bullish so far in April, with it finding some kind of support. And we can see that in more detail on the weekly. The support has come at the 200 simple moving average. We've seen bullishness. We can see now price is interacting with the 50 simple moving average, which is currently acting as resistance. And on the daily time frame, we had a gap up through the 200 moving average. Price came in, the bears came in, pushed price back down and closed below the 200 moving average. So the 200 moving average is acting as resistance. So across all three indices, is price in a pullback? Is it in a reversal? It's very unclear at the moment what kind of market conditions we're in. And it's really in these kind of market conditions where you want to stand aside and not get caught up in intraday movement or trying to predict what the market is going to do next. A lot of people will be doing that now and losing vast sums of money. Don't let that be you. A key skill of investing is applying patience, letting the market dictate a clear direction, and then building a portfolio around either a bullish market or a bearish market. For now, you really want to be standing aside. Okay, so let's move across to the SP 500 Mini, which gives us an indication of pre-market action. Starting with the monthly time frame, we can see that price is finding support at the low of last year in the month of April. So again, are we going to see bullishness, or is this a temporary bull revival before a next leg down through these support levels ahead? On the weekly time frame, we can see that so far the pullback of this week has taken price to the 200 moving average. So we want to see where price closes really by the end of the week to get a good understanding of whether we are going to see further bullishness next week or potentially weakness to the downside. And if we look at the daily time frame, if I just open up the daily time frame, look at yesterday's candlestick. It was very bullish. Bears came in and pushed price back down. So again, a good example of why you don't want to get caught up in intraday movement. You can get whipsawed in and out very, very easily. So far today, we're seeing a little bit of bullishness. Really just shows that there's no clear momentum at the moment. The market doesn't know whether it wants to continue towards that 200 moving average or whether now we're going to find resistance and move back to the downside. So it is a waiting game. Once the market dictates a clear direction, we can then act accordingly. And remember, guys, while the stock market is setting up, we can, of course, look at commodities and currencies for opportunities, because often when money leaves stocks, it goes to another market. So it's essential to look across all three asset classes. Okay, that's me for today, guys. Please like, comment, and share. Let's get the message out. Let's improve financial literacy. Let's get people understanding how to manage their own portfolio and take control of their money, so they're no longer have their hands tied by underperforming funds and a banking system that really gives you nothing. Let's get the knowledge and the information out there. So please like, comment, and definitely share. And I will see you on tomorrow's recording.